Greetings from Fins Alliance. I'm Shana Sultana, CEO and Chief Consultant of Fins Alliance Risk Advisory and Consultancy. Fins Alliance Risk Advisory and Consultancy from Bangladesh and EU Advisory from Singapore have been collaborating to offer comprehensive sustainable finance services and solutions of international standards, aligned with Bangladesh context to facilitate the financial institutions in Bangladesh. These are some of the services that are being provided from our collaboration. So these are institutional need assessment and gap analysis, impact assessment, sustainable finance framework and roadmap, sustainable financing reporting. These are some of the importances of sustainable financing, as we all know. We are also offering a CRO dashboard, which is a fintech solution for monitoring overall risk position. It is a software that provides consolidated risk rating based on KYC risk, financial risk, and credit risk of a counterparty or complete portfolio. Here you can see some of the details on our capacity building initiatives. We are offering full-blown 6-module comprehensive training on sustainable financing. These are most suitable for corporates. Module 1, Sustainable Finance as an Opportunity to Increase Banking Revenue. Module 2, Why Sustainable Financing is Critical. Module 3, Regulatory Requirements and TCFD Reporting. Module 4, Sustainable Business Activities, Preparing the bank's staff to identify opportunities for revenue growth. Module 5, Environmental and Social Risk Analysis. And finally, Module 6, Climate Change and High Carbon Risk for Banks. Our partner and speaker for today's webinar is Marcus Hall, who is partner EW Advisory Limited Singapore, working on developmental, sustainable finance and debt capital origination and advisory. Marcus is also a consultant of ADB, working on projects related to climate change and green banking, having several environmental and social governance certifications with UNEP FI and IFC, as well as training courses HKMA. It is our pleasure to host a webinar on EU regulations and green financing for the RMG sector. The RMG industry, a cornerstone of our economy, faces new challenges due to the EU regulations. When Bangladesh graduates in 2026, trade benefits associated with LDCs will end immediately in nations including Canada, China, India, and Japan. But the EU and the UK are expected to offer a 3-year grace period, extending the EBA trade privileges up until 2029. The new GSP regime proposed by the EU for 2024 to 34 might end preferential treatment for Bangladesh clothing items due to safeguard measures stated in Article 29 of the regulation. Eligibility for GSP Plus benefits on other products will depend on compliance with 32 specified international conventions, an increase from the current 27. So whether the country will qualify for GSP Plus depends on its success in complying with the conventions and effectively implementing all of them, potentially leading to significant alterations to its market access terms with the EU in the upcoming years. These alterations may have a direct impact on export earnings in different sectors from the EU, including RMG. As we strive for compliance, we must retool our practices. Today's webinar will include RMG strategies, green financing solutions, TCFD, which is Task Force on Climate-Related Financial Disclosure. So with that, we would like to go over to Marcus. Marcus, over to you.
Thank you very much for that introduction. It's very nice to be here. And it's sort of ironic that we're all experiencing very much of a heat wave these days, and it's impacting, among other things, power delivery in some parts of the world. But but we'll try and press on anyway, and hopefully we'll all be able to get through this presentation in one piece with power connected. As Ms. Shanaz pointed out, our firm in Singapore is EW, and Shanaz's firm is Fins Alliance. We work closely together, and in the capacity of delivering advisory related to sustainable finance, as well as capacity building or training. And one of the areas that we focus on is in working with corporates and banks. And for banks in particular, especially in Bangladesh, obviously providing financing to the RMG sector, ready-made garment sector, is really important because that's a very important export from Bangladesh. But as we all probably know here, there's a lot of pressure on the RMG sector to constantly provide lower pricing. At the same time, we see in the EU and other parts of the world, but EU as a leader, so European Union, new regulations being formulated as we speak, actually. Some of them are being delayed a bit, but the overall intent is to help the EU become climate neutral by the year 2050. And that's having an impact on how the EU imports goods, including garments, including from Bangladesh. Today's presentation will be discussing EU's efforts to mitigate the impacts of climate change and what impacts that regulatory environment is having on the Bangladesh ready-made garment sector and how it conducts its business. Creating some regulations that are impacting many industries and also many facets of industries, from their production through to their reporting. Then we'll take a look at what sort of things the ready-made garment industry will have to do in order to comply, in order to be able to keep selling into the EU. We'll discuss what the effects of these changes are likely to be, and then we'll look at some methods that banks and FIs can use to try to lower their funding costs so that they can provide competitive financing to the sector and allow the sector to remain competitive and to comply with the EU Green Deal requirements. Total ready-made garment exports were reported at $42.6 billion in 2022. Of the $42.6 billion in ready-made garment exports, half, or approximately $21.4 billion, were to the EU, which is actually made up of 27 countries with a population of roughly 450 million. Bangladesh's population, by comparison, is 170 million, and the USA is 330. Relative to GDP, Bangladesh's exports are relatively modest at roughly 12%. You can compare that to an export-oriented country like Vietnam, where exports make up as much as 85% of GDP. That can be taken as a sign that there's ample room for Bangladesh to grow its exports and consequently also its export income. No matter how you look at it, just the EU alone is a majorly significant market that really contributes to a great degree to Bangladesh's export commerce. The EU has been a global leader in introducing policies and regulations that are intended to help mitigate or adapt to the effects of climate change. These policies and legislations that they've introduced can be as far-reaching as restrictions or sunsets on product imports into the EU if, for example, they're deemed unsustainable. And one example of this is palm oil. The EUDR, or European Regulation on Deforestation-Free Products, is a regulation that came into force last year in the EU in 2023 and is currently going through its implementation transition period, which can last from 18 to 24 months, depending on the size of the corporation that it impacts. But at its heart, this regulation requires certain products that are sold into the EU to effectively carry certification that their production did not come as a result of deforestation. So, when we think of palm oil, we can interpret that to mean that the EU is requiring that producers of palm oil certify that when they set up their palm oil plantation or started to grow palm oil trees, there was no deforestation or cutting down of jungles that occurred prior. So why is the EU doing this? Well, the EU has calculated that these actions will reduce carbon emissions by 32 million metric tons annually. Bangladesh's annual emissions total, by comparison, are about 80 million tons. Now, Indonesia and Malaysia are the world's largest exporters of palm oil, and it's quite well known that the way you establish palm oil plantations is to cut down jungle or other forms of forest. Especially in Indonesia, much of the palm oil berries are grown by smallholder farmers, and they really have no means of providing the certification required to make sure the EU would continue to import. They can't afford it. Fortunately, there are for now other markets that aren't as strict yet relative to imports of palm, and these are markets like China and India. Indonesia is hoping to grow its exports to these countries, but this type of legislation is likely to be copied by other countries in due course. At risk in just that one commodity of palm oil is $6 billion in export of palm from Malaysia and Indonesia into the EU. At the same time, there's a likelihood that 17 million smallholder farmers in Indonesia are going to be impacted by this ruling. So we can say that the impact of the EUDR is not unlike some of the regulations that are impacting the ready-made garment sector in Bangladesh. Now, in case you're wondering, the regulation EUDR does not cover cotton, and I mention that because cotton is a significant Bangladeshi import that has come under scrutiny recently, both for human rights, mainly in China, and deforestation in Brazil. In the next section, we're going to dig into the EU Green Deal. But before we do that, let's just pause here briefly and see if there are any questions or comments. Now let's take a closer look at the EU Green Deal and focus in on some legislation that's going to impact the RMG sector. I think we all know that the ready-made garment industry is facing some pressures that in turn amount to additional costs and consequently a squeeze on their margins. These are things like ensuring a safer workplace, ensuring the proper discharge of waste and effluents, and even minimum wages. While these are all things that are probably inherently good and well intended and maybe should be implemented for all of our collective benefit anyway, there's no denying that there's a cost to implementing these things. And when there's a cost, there's a squeeze on margins. So RMG industry is facing these pressures, and at the same time, they're also getting pressure from their buyers, big buyers like H&M and Benetton and Zara and people like that, especially the large volume buyers, are continuously pressuring the RMG suppliers to reduce their prices. And the tactic that these large buyers use is that they threaten to move their purchases to a different supplier. And when you're a relatively small or medium-sized RMG company, you come to rely pretty heavily on that large buyer. So the threat of them moving elsewhere is quite daunting. So it all starts with the EU Green Deal. We call the Green Deal a policy package, or a package of policies and regulations that are set up or being devised and thought of and planned with the intent of making the EU, the European Union, carbon neutral by the year 2050. That aligns with the Paris Agreement, which is an agreement that many countries, United Nations member countries, all signed up to, including Bangladesh, working towards limiting the impacts of climate change. What does carbon neutrality mean? Well, big picture, that means that we will only emit as much carbon through all of our processes, industrial processes and natural processes as well, only emit as much carbon as our atmosphere is able to absorb through its natural processes. Now, obviously, many sectors, many activities, and many industries can have a negative impact on climate. The Green Deal policy package is really an evolving set of policies and regulations that will impact many of these industries and businesses. So there's immense resources of about €1 trillion that are being allocated, and the policies and regulations are going to impact how we use resources. They will dictate how we restore nature and biodiversity, and they will impact our health and well-being.